I think markets are rational. They have digested overnight the outcome, and you know how it is. We have the early polls at 8 p.m. last night. They were suggesting a big win from the left, but when you look into the details, the far left, hasn't made such a big progress. It's essentially the moderate left that has made some big progress. And so at the end of the day, if you look at the outcome, first, European parties have a vast majority in the parliament. That's the first big win. And the second is that, as I said, the far left is not going to be able to govern without making either big compromises or not govern at all.
But when you think about some of the pledges that the coalition of the left had going into this election, we're talking about higher spending, some of them considering wealth taxes too. Surely there's a risk here when you think about the outlook for French assets.
Yes, I mean it is not only the problem of France, to be honest. It's a European problem. It's growth, which has been very weak for the last 3 years. So we need rate cuts. We need also, I think, confidence to increase in France, but also in the rest of Europe. For that, we need inflation to normalize. We need wages also to catch up, and we need the spread between wages and inflation to improve, so that consumers, go back to consume, basically.
Which assets stand out to you at this stage as a way to protect the portfolio amid all of this volatility, not just in France, but across Europe?
Well, precisely. I think right now, we're going to have the U.S. election. That's going to be the big milestone for markets this year, with also quite some
European assets.
Yes, of course, because when you get somebody like Trump elected, if he's elected, that's going to have big implications for global trade. For the war in Ukraine, so also big implications for Europe. So at this stage, we're keen to remain invested in defensive assets. So for the equity market in Europe, that's Switzerland and the UK. Two different type of defensive stocks. One is very value, that's the UK and global, and the other is very growth, it's Switzerland.
Let's look at the Eurozone itself. You're telling me that you're quite cautious about having a strong presence in the Eurozone as of yet. When you think about the 20-member bloc, usually Italy tends to be a concern for investors. That's no longer the case. Is France or Germany now ultimately the big concern for investors?
It's true that if you want today for Europe to progress and move on from a political perspective and hence an economic agenda, you need France and Germany to agree. And right now you have two countries which are ungovernable. The alliance coalition in Germany is not moving anywhere, and in a year's time we have the elections over there. And now in France, we're going to find out, how it's possible to govern France in this context. So Europe as a whole is not going to move very, very far. And then Italy, it's true, that's the paradox of these days, is that they seem to have stability. Mrs. Meloni won the European election. That's probably one of the few big countries in Europe where the current leader actually won the election.
I want to look at the fiscal position for France. What do you think is going to happen for the rest of the year when you think about the next budget? First of all, whether France will actually manage to approve one, and how that is going to potentially raise question marks in Brussels amid the new fiscal rules.
Well, that's all to be discovered, to be very honest with you. But
are you worried about it?
Yes, absolutely. It's going to be a point to follow. I think fiscal consolidation is going to have to come in France. The deficit was not good last year at over 5.5%. So we are far from respecting the new EU rules. So there's going to have some efforts to be made. However, what kind of government is going to implement that? That's the big question mark. Is it going to be a technical government doing the right things, or is it going to be a coalition of parties? That's all remains to be found. And then growth, again, real growth will be very important, because if you have growth, then you're in a position to deliver